The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as the dust settled on Friday, USDA report day, quarterly grain stocks, annual small grain summary reports. You throw in the end of the month, the government shutdown business, a lot of fodder for the trade to take a look at. And really, at the end of the day, hard sell-off led by wheat and soybeans, with corn getting pulled lower as well as we wrapped up Friday's session. Here to walk through things with us and talk about it, DuWayne Bosse with Bolt Marketing joining us on the program today. DuWayne, always good to talk with you, buddy, and we have no shortage of things, I think, to discuss here as we wrap up the month of September. Hope you're doing well.
Yeah, doing really well, but I'm going to be shut down next week. I should warn you. No excuses. I'm just not going to work. And no, I'm sorry. Really bad joke.
I was going to say, is that going to include no tractor time then too, or what's the case? How is harvest looking up there? I guess let's start with that. Let's do the softball first. How is harvest looking in South Dakota, DuWayne?
Yeah, slow start. Just when the beans and corn started to get ready for harvest, we started to get these sporadic rainfalls, I guess I should say, and been slowing us down a little bit. But no, I am looking forward to some sun and wind after another half inch this morning of rain. Hopefully we can get going in one of our locations here tomorrow or this weekend. We got some days of wind and sun and a little bit of heat. So a little tractor time would be very good. Yeah, I'm one of those lucky guys that get to do something like that for a job. So looking forward to it.
Well, good deal. Well, we'll wish you best of luck with harvest and hopefully get some of that tractor time here next week. And, you know, I think a lot of folks, as they're getting some of that tractor and combine time, probably don't want to take a look at the market, especially after Friday. Just a stinker of a day. I mean, USDA surprised us again. We figured that they would, and now we have to digest all of the data and trade this data. And I think the biggest things that stood out to me, the wheat side with some of the numbers there. Soybean stocks, I know, came in a bit higher than the trade estimate, still, I think, technically down 2%. But nonetheless, it just felt like the wheat numbers, the soybean numbers were probably the most bearish out of the report, DuWayne.
Yeah, absolutely. Yeah, wheat, especially for spring wheat, the production was higher than anticipated, but in all categories it was higher. So in the end, it made for a higher wheat stocks than we were anticipating. Not unbelievably higher than the trade estimate, though. Not wheat's got to go down 35, 37 cents type trade. I think what you did is we got this report out of the way, and the bears that have been wanting to sell stayed on the sidelines before this report, just in case USDA wanted to throw one of these, hey, sorry, we were wrong on last year's crop size for corn or soybeans, which was definitely possible, and a bullish surprise. So once you didn't get that bullish surprise and, you know, stocks came in fairly close to trade estimates, it's like, okay, now we can sell again. And then you tack on top of that this whole government shutdown, which I tried to make a poor joke about at the beginning. And it's just, get me out of my longs, get me short the market. I don't care about the price. And wow, I had some ugly looking charts going into the close here.
Well, and that's the thing too, is that you brought up the charts. I mean, with a hard sell-off here on Friday, plenty of chart damage has been done in a lot of these contracts. And I'm looking at everything, wheat, soybeans, even corn. I mean, getting pulled down back to some of the recent lows here after we've really, what was it? I think we've had 4 or 5 days higher in corn here. And well, that streak ended on Friday. So, I mean, to your point, plenty of chart damage, DuWayne.
It did a lot of chart damage. Yeah. I mean, Corn, I was having a hard time being a bear to that market, explaining why I'm still bearish as the market was grinding up the last few days. Got up close to that 490 resistance even this morning. But yeah, a key reversal now, and we're going to close below moving day averages. Looks horrible. But really, when you look at chart damage, wheat is where you want to look and see. I mean, we busted through contract lows today and really dove quite a bit lower. It's not like we went through, ran some stops, and then found support. We were just tanking into the close. Wheat's kind of doing what I honestly kind of wish corn would do too. Now, this sounds bad. I want it to go down. We should always want it to go higher. But Econ 101 says that can't happen. I think what wheat's doing here is, okay, we've got plenty of supply. World prices are down. Let's go down and let's find where we find some demand. And I would love to see corn just go ahead and do that too, because if you back up this week, we've been waiting for China. Is China going to buy from us? That's kind of our last big hope as a bull. No, it doesn't look like they are. The rumors are that they bought almost 1 million metric ton out of Ukraine this past week, and they're buying out of Brazil. They're not buying anything from us. In fact, there was a cancellation on the soybean side this week in the weekly export sales from China. Well, it was from unknown, previously known as China.
We assume it to be China, yeah.
Right. Yep. Right. So not a good week on the demand side. We went through this quarterly stocks, found out we do have supplies, and it's just like it all hit us at once here this afternoon and created a trade that really makes you glad it's a Friday.
Well, and to your point as well about China, not just on the corn and wheat side, trying to go down here and find some demand, but maybe even soybeans too. I know there's been some rumors in the trade this week that China's looking to cancel some U.S. Gulf supplies of soybeans and go into Brazil to buy cheaper supplies. So that's in there as well, right at the start of our typical soybean export season.
Yeah, I know. Yep, that was a trade rumor this week too, and I think that it really kind of got confirmed with that cancellation Thursday morning on the weekly export sales. I think that was China canceling those Gulf beans from us, and we know they were buying more from Brazil. So yeah, and they're buying them for October, November, December delivery out of South America. I'm like, that's when we're supposed to dominate the market. So man, is it hard to be bullish right now. Now, our soybean stocks are still fairly tight, but it's harvest season though, Jesse. They're not tight right now as the combines start rolling. We're going to fill up some of these crush plants again. Basis is still fairly good at a lot of locations because we're just getting started on this harvest. But I got a feeling when we find out this crop is maybe a little bit better than anticipated too, which is a wide range of guesses too. Mm-hmm. But when that comes in, I'm afraid this basis gets even wider, and this could kind of snowball on us a little bit. We're used to making harvest lows early and rallying back, but that was short crop years. This is technically maybe a short crop year, a little bit below trend line, but it's not nearly as bad as we thought. Yields, to me, they're coming in a little bit better than expected, I think.
So looking at this picture here, and then throw on top of it all the economic and outside headwinds and the worries about the government shutdown, because that's another piece of the puzzle here. Mm-hmm. If I'm looking at my marketing plan after this weekend here and trying to assess things, I know it's busy with harvest, but to me, it would seem like a no-brainer that there's got to be some risk management or some reassessment of your risk management strategy, just with the table sort of getting reset, so to speak. I don't want to say it's a complete reset, but this is definitely something that I think warrants a discussion on your operation, doesn't it, DuWayne?
I think so. I mean, let's assume marketing plans had guys selling beforehand, for the most part anyway. If that's the case, you're looking at these levels, and if you see some support, you see a better trade action, you can think it's a harvest low and get out, but I'm not seeing that. So just stay short if you're already short the market. If you didn't, I had this phone call quite a bit this week. Guys calling in, got started on beans in the places where they were able to go a little sooner. Yields were higher than anticipated, to quite a bit higher. What should I do with my extra beans? They still had a good basis. And so then you go back to looking at your own location. What's your cash price? If you can let them go and change it to cash instead of paying this high interest rate and obviously riding the market, hoping it goes higher, go ahead and sell it. So that's been a little bit of some market action we've done this week for guys that are a little undersold. So a little bit of everything, but mostly geared towards protect yourself. Now, if you want the upside still, put options aren't that bad anymore, because we're closer to expiration for December, November contracts. You can buy some put options fairly reasonable and have that floor. that way you still have the upside everybody wants right now.
Do you see as well with some of these moves from the reports? Do you see it affecting the price of 24 corn, 24 beans, DuWayne?
It hasn't that much yet. And I do wonder, if I'm such a bear for the 23 crop, why am I not selling more of the 24 crop? Well, earlier in the summer, we just sold 23 corn a little bit more aggressively and sold the D's to D's spread to kind of gain some on the 24 crop. The only thing about the 24 crop that always scares me is that if I'm going to be selling that, I feel like I have to be buying some of my inputs as well, which it is that season, isn't it? We all have seed guys stopping around the office asking for some seed sales. If you're buying your inputs and 507 D's 24 corn works, you probably better be selling some of it, because obviously I'm talking like an ending stock of 2.5 billion. That doesn't scream you're going to have a tight situation next year, but I'm never huge on going out too far, a second year out, because things happen. We get hot and dry in Argentina again, and then we get a rally in soybeans. But just remember, with the crop sizes we have, weather scares wherever they're at in the world are probably meant to be sold.
We are having a conversation today with DuWayne Bosse from Bolt Marketing. DuWayne, let's go over to livestock, talk about that trade a little bit. We don't want to forget about cattle and hogs. Although we might want to forget about it after Friday's trade. I mean, it was a pretty rough end to the week and end to the month there. And I think starting with hogs, Thursday's quarterly hogs and pigs report was surprisingly bearish, and I think that was kind of what we saw on Friday, was just a spillover reaction to that report.
Yeah, I think so too. These livestock markets have been crazy this week. Hogs were down to this 70, these hogs were down to the 71 level, and it felt like it was too cheap, and we really rallied up right into that quarterly's pigs report, assuming we were still going to find hog supplies lower year over year, but we didn't, did we? And it really came from the size of the litter up sharply year over year. That's kind of putting the total number of hogs back up there to about even for year over year. So yeah, bearish surprise there. That started the market lower today. Cash and cutouts have been trending a little bit lower here this last week, and then you tack on the government shutdown. Nobody wants to be long, so therefore a really nasty red market there in the hogs.
Yeah, and I think some of that maybe permeated into the cattle as well, along with the worries about the government shutdown and more. And cattle have had just a rough week overall, though, too. I know we tried to recover some on Thursday, but then we pretty much gave all that back on Friday. So this cattle market really has been depressed all week long, DuWayne.
It really has, and boy, did I get caught on the wrong side of that feeder market. Lately, if you look at all these upward trending charts, right, you have a pullback, it's worth buying, and we're going to go make new highs. It's been months of that in a great grind, and I got caught thinking feeders were going to do that this week after they pulled back a little bit, but boy, guess not. Slam down, and then you feel like, well, when it's down $4, you can't get out that day. That's too much, right? And we tried to rally a little bit. But I think this was fun saying, you know what, we're long the market. We've been long for a long time. We've made a ton of money. End of the quarter, end of the month coming, a possible government shutdown coming. That's what happened, I think, is they decided, I want out, and they don't care about the price. And here's the thing, every producer needs to realize, when funds decide to do those things, Jesse, there's so many of them, and so very few of us trying to buy it back and think we know what the market's doing, that they'll just wash us out. There's too many sellers. And then all the bulls got afraid to buy the thing. Tried to buy it up yesterday and get it to go, and it looked okay, but boy, seeing this turnaround again today, Jesse, maybe it's just because of the government shutdown, but this is really starting to look like a cattle market that's at a top. Markets that are really bullish don't have these down $2 to $3 days every once in a while.
No, and really a week's worth of multiple $2 to $3 down type days in the cattle market. And I think too, with the government shutdown, and also you brought this up earlier, interest rates, and just I think the cost of money, and a lot of folks across rural America and really across the country as a whole are feeling the pinch in their pocketbook. And so some of that demand for beef at the grocery store, demand for pork, I'm curious what that's going to look like the next couple of months, because things are, the talk of higher interest rates yet, et cetera, et cetera. I mean, there's a lot of families that are feeling the pinch right now, DuWayne.
You're right. It goes really, this cattle market feels like it topped back when the Fed made their speech last week, right? Didn't raise the interest rates, but they talked about the interest rates staying higher for a longer period of time. And it's just like that caused the outside, let's call them the equity markets, to really start to soften. I mean, the Dow, we haven't been this low all summer. And so, yeah, people are concerned about a recession coming in 2024. So am I, because when crude oil is skyrocketing up, all this interest rates is hitting everybody's pocketbook. Okay, now get really high fuel prices on top of that. And I thought it was just having a teenage daughter, but I think both those are also affecting my Discover card quite a bit. I'm concerned just like everyone else. And when everyone gets concerned, it's easy to take money off the table. CDs now in banks are worth quite a bit. So, you have people doing things like that. It's kind of scary for next year. And also the higher US dollar, Jesse. We had good beef exports this week, but I really look in 2024 for our exports to be down sharply year over year, because Australia's still got cheap meat. Brazil's got cheap meat. We have high prices and then a high US dollar. I think our exports are really going to go south, and that might end the cattle rally for us. And numbers are still going to be tight here, no doubt about that. But if people don't want to pay for it, Econ 101, you will go down.
It's a good point. You mentioned the dollar, and the dollar a little bit lower to round out the week in the month of September. Crude oil a little lower as well. And that's been an interesting correlation through all of this. Crude and the dollar working higher together. That's not typically normal, is it, DuWayne?
No, it really isn't. I think it's just a short-term supply thing when it comes to the crude oil. I mean, they backed off production. We pulled reserves out. And we just don't have a lot of supply in the world. It is a little scary. I'm hoping everyone kicks down and they produce more and we can get lower fuel prices in 2024. And some exports do believe that'll happen. It's just a little bit of the concern that if it doesn't, will that spin us into recession, like I had mentioned. And yeah, the US dollar, that's just an ugly chart when you're a commodities broker, right? You don't want to see the dollar as high as we are. Yeah, we're just under 106 now, but rather be 97 instead of 106, I guess.
Yeah, no, that's very, very true. Well, and to all of this, DuWayne, I hate for us to sound mighty bearish, everything, and really doom and gloom here. We got to try to find a glimmer of hope, I think, so to speak. So just let's wrap up this discussion overall. Obviously, a lot of things to digest. There's still plenty of unknowns in front of us with, the government shutdown and, will we even have an October WASDE report, for instance? I mean, that's going to be another key, et cetera, et cetera. And yield monitors, we're running harvest quickly. So overall, it's a busy time of year. We need to stay vigilant. What would you say to folks as they're thinking about the marketing plan, looking at things? I mean, can you sum it up? Give us a little bit of silver lining here, maybe, DuWayne?
I actually can. That's the thing about bean harvest, at least up here. It seems like there's dewy mornings and you do get a little break. And, if you're one of those lucky guys that are finding yields a little bit better than you anticipated, that's good. I can do a lot of marketing magic some years, and that's all great and good, but it's really bushels is what we're selling, and that's how we make money. So if you're one of those lucky ones, have some extra bushels, go back to your spreadsheet. You might find out that this price isn't as bad as you thought then. Yes, we're not at the $6 corn we wanted. We get that. But if your yields are really high, this maybe works. And listening to guys like us talk about the demand outlook and that, maybe it's okay to just sell and be a little bit more aggressive. Remember, you can always buy it back this winter if we have weather problems in South America. But right now it is bearish. But yeah, that's the bullish spin I'll try to put on it to wrap it up. That if you got some extra bushels, maybe that bottom line isn't too bad.
Don't be afraid to use the tools at your disposal. I think that's another good thing to throw in there, right, DuWayne?
Yes. You got brokers out there with teenage daughters, like I mentioned. So you got to help their commission book every once in a while. Is that point blank enough? Is that
that works for me, and I think some folks will respect the honesty there as well. DuWayne, if folks have questions, they want to reach out to you. You mentioned you're taking some calls this week. If they want to reach out to you and talk about things a little bit, how could they get a hold of you, DuWayne?
Yeah, they can call us directly at 605-448-2365. And they can always check us out online at boltmarketingllc.com.
with that, DuWayne Bosse from Bolt Marketing. Always good to chat with you, my friend. Thanks for joining us here this week, and we'll talk to you again soon.
Sounds good. Thanks, Jesse.
That's going to do it for Market Talk today. Find us online at markettalkag.com. I'm Jesse Allen. Have a great weekend.